Thanks for joining us for today's episode of The Capitalist Investor. Once again, the dynamic duo has returned and we are back in action. Diamond Hands Derek and no nickname Mark.
No nickname Mark. Mark, how you doing, buddy?
Good, man. Starting to run out of time on summer here.
I know.
You know?
A little depressing.
It is very depressing, man. Starting to try and think about, some last minute summer vacation opportunities. And I got to tell you, man, my kids go back. My oldest daughter, she goes back on August 15th.
Ooh.
15th.
That's early.
That's super early.
Yeah.
I think the other kids go, mid-20s, but the 15th, dude?
I want to say the 24th is what we do.
Yeah.
We're actually entering the public education system, so we'll see how that goes.
Man. Well, let's hope they have school in session for you.
I know. We got some backup in place, but
yeah,
man, it's rough out there in the streets when you got two little kids.
It is rough. It is rough, man. Especially with the Delta variant news and all that stuff.
And Delta Plus.
Why are they talking that now?
Delta Plus. I saw it on Twitter.
Ridiculous, man. Because cases have gone up, but hospitalizations and deaths are not following suit. Probably because 70% of the adult population now has gotten at least one shot.
Right.
And one shot, depending on whether you got Pfizer or Moderna, was like 92 to 94% effective. And when you got the second shot, it went to like 95 to 90.
Yep.
The one shot is good enough to help you with Delta,
For
right?
sure.
So anyways, I don't want to talk about that.
Yeah.
Let's move on. Let's talk about Robinhood's IPO.
All right.
Because this thing was the biggest dud I'd ever seen. And as we speak, it's like a grand finale fireworks show.
That's ridiculous.
Like, it literally went from dud to grand finale. And I think we just need to break it down, man, because I am not bullish on this stock at all. I do not think it should be trading where it's trading right now. And I think it could be dangerous for some retail investors that might get sucked in.
Yep.
The interesting thing is there's a lot of people out there calling it all of a sudden a meme stock.
Right.
And, we've been big champions of the retail investors and how they may have actually been the smartest guys in the room with regards to, bidding up AMC and GameStop and giving those companies a chance to issue more shares and generate cash so that they can remake their businesses. And we're like, man, they may actually be the smartest guys in the room. But D, I also believe that these retail investors hate Robinhood.
Right.
So I'm super confused. Are you?
I'm dumbfounded, honestly. If we're full disclosure here, I just came from downtown at a doctor's appointment for my son. And when I popped this open here a few minutes ago, I was not expecting to see what I saw. To be honest with you, completely blindsided.
What do you have it at? $62 right now?
$62.46. It's up 33.46% today.
It was up by it. I think it was up over 50% at one point today. And then it came back down. Maybe it was only up 20. Dude, it's wild.
Yep. And I think, just a quick recap, like you said, what I read was that it was one of, if not the worst IPOs in history.
Yeah. I mean, their estimated range was, I think, like 38 to 42 bucks. And there was so little investor interest that it came out of 38 bucks.
Yep.
And then it just sold off. And I don't know where it bottomed out, maybe 33-ish. I'm just kind of making that up because I wasn't really tracking it on a day-to-day basis because it's just not a stock I like. I don't have much interest in it, but we also don't short. So I don't root against stocks.
Right.
It's not like I want this thing to go to 10 or 0. That's not me. I don't short. So I have no vested interest in it going lower, but it's uninvestable according to our investment strategy.
Absolutely.
Now let's talk about, we'll wrap up the show with our bearish case on the stock and why we don't like it. So, but before we get into that, let's talk about why the heck this thing is doing what it's doing right now. So there's absolutely zero news on the company. The only news is that yesterday it was announced that Cathie Wood had accumulated about $200 million worth of shares in her ARK Innovation ETF.
Right.
Okay. Now, Cathie Wood, no disrespect to her, but she has she's carved out a niche in the investment industry. Some people are just completely infatuated with her.
Right.
I don't see the appeal. I don't. I mean, she seems like a very nice woman, but I have watched before she became super duper famous and somebody that retail investors tracked. I remember watching her on CNBC, get interviewed, and she had this outrageously bull case for Tesla. Just outrageous. Turns out she was probably closer than everyone else on this, but I don't think it's because she was right. I just think because that happened to be a stock with a cult-like following. Right. I don't think she did it. But her thesis on the stock was weak. And when she was asked very specific questions to defend her thesis and her position, she waffled. She wasn't able to do it. So no disrespect to her. I don't want to bash her. She's built a fantastic business. She has been in the right place at the right time, and I'll kind of leave it at that. But that's what happened yesterday. So we're recording this on Wednesday, right? So we're talking about Tuesday. This will be out a week from today. Is today Wednesday? I have no idea.
Today's Wednesday the 4th.
All right, that is perfect. All right. So that's what happened yesterday. That news broke. And apparently, D, it seems like a bunch of retail investors who are just head over heels in love with her. They think she walks on water. They think her crystal ball is better than everyone else's. Followed her into the position, and they're continuing to do so today.
Right.
Is that what you're seeing? I mean, there's no news.
There's absolutely no news. And yeah, it's... She's fun to follow on Twitter and kind of what she does.
Yeah.
I really only feel like that has happened where I've noticed it significant on my timeline for really like the last maybe 3 months or so. But I've seen lots of blurbs come through where, she's buying DraftKings or whatever the, kind of high flying stock is. And it's not really moving the market much at all.
Yeah.
It's probably a nice, if you have already purchased a specific stock and then you see her buy it, you're like, oh, that's cool. That makes me feel good about this. But I haven't really seen a whole lot of, AMC type meme stock momentum push any of her picks big like it has with Robinhood today.
Right. Well, so all right. So this kind of leads me down a path of wanting to talk about thematic investing.
Okay.
Because that's what she does. Right. It is a thematic ETF that invests in disruptive innovators, I believe is how she has it worded. All right. Disruptive innovators. Does she own AMC? I don't think she... I
have not
I
seen
would
that.
not consider them to be disruptive or innovating.
No.
So I would doubt that would fit her thesis. But these disruptive innovators have done very well as beneficiaries of increased liquidity that came out of the pandemic. The ARK Innovation Fund, ARKK, and this is, we don't own this thing, and we're not saying it's good or bad, but that fund is underperforming the S&P by about 22% this year. Okay. Now, let's put that in perspective. It walloped the S&P last year. And the track record's there. But the point I want to make, D, about thematic investing is that there is always a flavor of the day. Always.
Every day.
These things come in favor and they quickly go out of favor. So technological disruptors, that may have worked in 2020, right? 2021 could be the year of microcap stocks.
Right.
2022 could be the year of biotech stocks. 23, you never know. These thematic, crypto is a thematic play.
Absolutely.
Right? You need to know when to be in, when to be out. And as far as Cathie Wood is concerned, I view her thematic strategy as I'm going to buy without doing much due diligence, because she just hopped into Coinbase, and Coinbase has done absolutely nothing.
Right.
So she jumps into Robinhood as well. It's almost like I'm going to buy the stocks that have the most hype. Like
you see that almost universally with all of her trades that are coming through.
Right. There's no regard whatsoever for valuation, for quality of management team, for whether or not the growth story is durable. There's no regard for that. But that's what you get. So just to be clear, she doesn't have to do any of that in a thematic ETF.
Right.
In fact, a lot of ETFs, like, it's just a formula. It's almost like a formula. Like, we're going to buy every single company with a return on invested capital that exceeds this number with a market cap of less than this number. Like, that's how a lot of these ETFs work.
So it's very interesting that you mentioned that, because what popped into my mind, we've talked extensively on this show about having a plan. What we're looking for when we and our team are looking to invest in a stock, right? So we're looking for a growth story, we're looking for the management team, and we're looking for the valuation. When someone is talking with you just casually at a party or something like that, and they mention, oh yeah, Tesla, they're a disruptor, they're going to be the future, right? That's what the description is, the future. Well, that may be the case, but how much of that is already priced into the stock when you're talking about it? And I feel like those three criteria, which I just set forth there, aren't always looked at when Cathie Wood is buying some new funds for her, or for some new stocks for her fund.
Correct.
So, I'm looking at her top holdings here: Tesla, Teladoc, Roku, Square, and Zoom. So those have been pretty heavily talked about stocks in the last year or so. Shopify is up there. Coinbase is number 7. So
a lot of the stocks you just mentioned, their best days are behind them.
Right. That's exactly what I was going to say.
Yeah.
Disruptors may disrupt an industry, but that doesn't necessarily translate to buying and holding. It doesn't always necessarily translate to when you're thinking about entering into a position, right? You might have missed the hype already, and that kind of brings me back to the Robinhood point. Robinhood is just a stock I'm never going to invest in. I just don't like the company.
Correct.
So like you, I haven't been paying huge attention to it. But as we sit here today, have we missed the hype train? Is it over in one day? Or is it going to continue to kind of ride this momentum like a lot of these stocks tend to do for at least a couple weeks?
Well, D, here's my main takeaway. My main takeaway, since we've said hype so many times today, is we are going to roll out an ETF. And the ETF is HYPE, HYPE. And we're going to become gajillionaires.
Nice.
And we're going to do no work, D. No work. We don't have to work at all.
Nope.
All we do is we check out which stocks people
Twitter
are talking about, and we are just going to throw them in that ETF. And we're going to become gajillionaires. I can't believe we just came up with this idea. We're going to be so rich.
Isn't that what Dave Portnoy already did, though?
I don't know. Is that what he did?
I believe it's Buzz, Buzz.
How did that thing do?
I don't know, honestly.
I wonder how much money he put. I don't have my Bloomberg in front of me. I'd love to see what the inflows and outflows look like into it. Also, I'd love to see what the performance looks like as well, right?
Yeah, I did not buy it when it came out.
The social sentiment ETF.
Yes.
Yeah. So it looks like it's been
$25.
choppy.
That's pretty darn
That's pretty
close
much where
to,
it came out.
Yeah.
Yep. So, all right, a few things before we get into walking through why we don't like Robinhood either as a company or as a stock. The one thing I want to bring to everyone's attention is I think it's very dangerous for any novice investor to blindly follow somebody like Cathie Wood or ARK into a trade. I think it's very dangerous. And here's how weird this is. The greatest investors of all time, Warren Buffett, Ray Dalio, Carl Icahn, Mario Gabelli, guys like that, when it is disclosed that they entered a position, those stocks don't move 50% in 2 days.
Right.
They don't do that. Why is her crystal ball so much better than everyone else's? Why?
I do not know.
Because it's not, but people believe it is. So I think that's strange. I also think it's concerning. I think everyone needs to do their own due diligence.
Right.
Now, if this is a meme stock whereby Reddit users are pumping it up, okay. I mean, obviously, we all know that works. Right. It worked with AMC. It worked with GameStop. It worked with a few other companies as well. So it does work. But I haven't been on the Wall Street Bets board. Haven't spent any time on Reddit lately. But a few months ago, there was nothing but negativity towards Robinhood.
That's true.
So I can't imagine. And maybe I'm way off here. So, I'll give myself an out on this statement. But I can't imagine that that's one that they're pumping right now. What are you looking at there?
I'm trying to find that list. Remember, we talked about it a couple weeks back, and now I can't find it. That tracks the mentions of different stocks on the Wall Street Bets.
God, that's our ETF model right there, right?
And I really don't see it getting a ton of buzz on there. So I don't know if Twitter kind of put two and two together and kind of married the two.
I feel like this is not the Reddit army. The Reddit army is very smart.
Yep.
Like those retail investors, they're like they figured out something that I didn't even think could be figured out. So
yes.
Kudos to them. Mad props to them. But I don't think this is them. I think this is smaller investors who just worship the ground that Cathie Wood walks on.
Yep. Absolutely. And I think number two, just my opinion here, when a lot of people saw that dud, I think a lot of retail investors saw that as a buying opportunity.
Yep.
Because we've talked about it on this show as well. Another point I wanted to mention about typically how much an IPO gets pumped up right at the beginning.
Yeah.
So, that's why the Robinhood IPO day was so confusing, I think is probably the best word.
Yep.
Because number one, it's an IPO. Number two, there weren't a lot of other IPOs happening, or obviously there was one, but not a name that big at that time. You figured when they set that target between 38 and 42 bucks, you kind of figured that it was going to double in the first day. You've seen that quite a bit from a lot of these recent IPOs. So when it didn't happen, and then you get other catalysts like a Cathie Wood making a bet on that stock, I think other retail investors who have become more powerful over the last year, that you don't have to be on, the Reddit boards to be a retail investor.
Yeah.
I think they saw that as a buying opportunity. Again, with not a lot of research, not a lot of due diligence, just kind of a momentum trade that a lot of people are talking about. And we've seen it these days. You don't need a whole lot of hype to drive a stock up 20, 30%. And I think that's kind of what we're seeing here today.
I agree 100%. So let's shift gears. Let's get into why Robinhood is not something we would own.
Okay,
the bearish case. But before we do that, let's just run all of the listeners through our investment strategy one more time. So there's 3 criteria that every single stock that we buy must meet at all times, not just when it enters the portfolio, but all along the way. We have to believe in number one, believe in the quality of the management team. Okay. Number 2, we have to believe in the longevity and sustainability and durability of the growth story. Number 3, we need to think the price is right.
Right.
We need to believe in the valuation. Okay. Just to remind everyone, there are lots of stocks that will not check all 3 of those boxes that will do very well.
Right.
They just do not fit our investment strategy from a risk management standpoint. If you want to be in our strategy, we got to check all 3 boxes. Other than that, we can't get down with you, right? So let's move on. Let's talk about management team first.
Okay.
What is your 10,000-foot view on Robinhood's management team?
So my 10,000-foot view really mostly includes Dave Portnoy's feud with Vlad.
Yeah.
Speaking of the Reddit army, really, I think Robinhood became kind of a household name.
Yeah.
During the meme stock buy-up, right?
Yeah.
And the first one was not AMC. The first one was, why can't I think of the name? GameStop. Totally blanked on that one. So essentially, the retail investors were kind of getting together, pumping up a stock that there were lots of shorts against to try to get that short squeeze working for them, and it totally worked.
Yep.
And kind of the mainstream takeaway from the retail investor, and specifically Dave Portnoy, during that time was a lot of these brokerages and trading apps kind of held back the action, and Portnoy specifically blamed the CEO, Vlad, for that. And he actually did a lot of interviews around that time. And just for me, he did not come off well.
No, I agree.
He did not come off as someone who was being 100% truthful, or most certainly just kind of seemed a little off, for lack of a better term.
Right.
When you see these apps just blow up, they don't necessarily have a traditional style management team like you find at, Ford or GM or something like that. It's typically the inventor of the app still running the show, who may or may not have a clue on how to run a company that's turned from zero to billions. Not overnight, but basically overnight.
Yeah.
So
I agree with everything you've said. If you look at management team, at the management team of Robinhood, they are software developers from Stanford.
Right.
Okay. I think they do a very good job running a video game company, because that's what the app is. It's a video game company. Right. You make a deposit, fireworks go off on your phone. Kudos to you. Like all it's just weird. Just weird stuff. It's a video game. The gamification of investing. Now, in fairness to Robinhood, they did a great thing by democratizing investing for the little guy,
right? The
newbie, right? And I'm very glad they did that. But when it comes to investing in the company, I look at Vlad and his team, and I think they're great at managing a video game company, but they have absolutely no financial background, and they don't have any experience or knowledge in what it takes to run a brokerage firm.
Right.
And they were exposed during the meme stock mania when they had to halt trading on the most popular stocks.
Right.
They were exposed. Okay. So they were ill prepared for that. So I think we can give management team an X. Does not get a check. Right. So let's move on to growth story. What are your thoughts on? I personally think Robinhood's best days are behind them.
Right.
I think they were beneficiaries of a lot of people stuck at home playing video games, and they just happened to have the only video game for investing. So I think they were beneficiaries of that. I think on a going forward basis, the comps are going to be tough to beat.
Right.
Completely
agree with you there. To be honest with you, I don't have much more than that. It's not exactly game-changing technology anymore. And they changed the story, but they changed the story already, right? So with the free trading for the retail investor, that story has come and gone. So, it's...
fractional shares, right? That was a good thing.
Yep.
The no commission trades, but everyone else followed suit.
Right.
So they have no competitive advantage anymore.
Exactly.
Their competitive advantage fizzled out within, I don't know, maybe 90 days of their competitors figuring it out. It's over and done with.
Yep.
And then you look at the rest of the app. They have no analytics. They have You have no access to any over-the-counter stocks like cannabis stocks. And, I would think a 25-year-old new investor would want to buy maybe Green Thumb or some, some sort of a cannabis play, but you can't buy that since it's over-the-counter. And we talked about this on prior shows.
Right.
And we both felt like, and I think you mentioned your brother as an example, we both felt like Robinhood's great for someone who's starting off. It allows you to break in. But once your portfolio hits, I don't know what the magic number is, 5,000, 10,000, 20,000, you're probably about to move on from Robinhood.
Right.
And that is a thing called churn. And churn is what happens when you have no competitive advantage. And that's what I see for Robinhood.
Right.
So I don't see how they can maintain their user base with no value prop.
Yep. Learning how to invest is a process. If you have an extra $1,000, and you're 27 years old and you want to get into the investing world, this is great for that. But I feel that when that 27-year-old is 35 and now they have $100,000 that they're investing, they're probably moving on from Robinhood.
Without a doubt, which is why the average account balance at Robinhood is $3,500. The average account balance at E-Trade is $100,000.
Right.
And the average account balance at Schwab is $240,000.
Right.
And there you go. That's what happens. As the account grows, you lose that customer if you're Robinhood.
Right.
Now, could these guys further disrupt their app to try and bring analytics and OTC purchases and all that stuff to the forefront? Yeah, but that still doesn't give them a competitive advantage over Schwab and TD and Fidelity. It doesn't make them any better. Now they're just playing catch up.
Right.
So I don't know, man. I mean, I can't get down with the growth story, so that gets an X. I can't get down with the management team, that gets an X. And when it comes to valuation, honestly, I wouldn't even know how to value this thing because it's so new. But what I can tell you is whenever a stock's best days are behind it, it gets a lower multiple.
Right.
So that's all I can tell you, man. Like when growth is expected to decelerate, which there's no way it can accelerate with a Robinhood. There's no way. All right, maybe I'll be wrong, and maybe everyone will call me the biggest fool. But I don't think I'm going to be wrong. I think their best days are behind them. And when that happens, you get a lower multiple on your stock. I mean, just look at how upset people get when Netflix misses a subscriber number.
Right.
Right? Stock sells off drastically.
When Apple announces a new iPhone and there's not enough new features, right, for the nerds out there. So the next day the stock drops 1.5%.
Yeah.
It's kind of like that, but Robinhood is at the beginning of this cycle. Yeah. And having seen so many companies go through the start to finish cycle here, the growth story seems like the biggest red flag for me. Yeah.
So, all right. So 3Xs for Robinhood. So it's not something we can invest in. It got 3Xs for us at $38.
Right.
It most definitely gets 3Xs at $58, where it's at right now.
Yep.
When we started the show, where was it at? 63?
It was 60, almost 64.
64 down to 58.
Yep.
In the matter of a 25-minute show. I mean, but that's what happens when stocks are moving quickly.
Right.
Right. Any last thoughts on Robinhood?
I think it is. I think what I said earlier kind of resonated with me.
That's when you tell yourself, thank you, you're welcome.
That wasn't a bad piece of advice. When you're learning how to invest, it's a process.
Yeah.
I think Robinhood, kind of watching what it does from start to finish, even if you're not investing in it, I think it's a great lesson. So, dud IPO, blows up a few days later. What is it going to do from here? And those 3 criteria that we talked about, how are those going to look as we move forward here? I'm just not super optimistic about it.
Okay. You remind me of A-Rod. So I watched this documentary on Netflix about the steroid scandal that was going on down in Miami. And I didn't really pay too close attention to what A-Rod was doing, but apparently A-Rod had a few paintings of himself on a horse's body. his torso on a horse's body. Did you know any of this?
I did not know any of that.
And he would regularly kiss himself in the mirror. Did you know any of this?
I did not.
It's the most ridiculous stuff I've ever heard, but apparently it's true. So when you just complimented yourself for being awesome, I'm just going to call you A-Rod.
Yeah, self-high five.
All right, that wraps up today's show. As always, thanks for joining us. Make sure you hit that subscribe button. Tell your friends about us. If you write us a 5-star review and you send us a screenshot, we will send you some swag. As we are coming close to ending summer, we will be getting some more of those unbelievable hoodies. Mm-hmm. So get on the waiting list. The waiting list is getting deep.
It's growing.
Get on the waiting list for some hoodies. If you have any questions, hit us up, info@swpconnect.com, and we'll talk to you next week.
The opinions expressed in the podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any investment, legal, financial, or tax strategy. It is only intended to provide education about the financial industry. Please consult a qualified professional about your individual needs.